Although yesterday's session ended well off its lows, what stocks should you be looking at this week if the markets continue to come under pressure? Joining us now, Saira Malik, the managing director and head of global equity at Nuveen. Saira, you brought along some picks. We showed a chart before, and it was a beverage maker that fell precipitously, and that was, of course, Coca-Cola. So what do you see here?
So we see actually strong organic growth. Coke is actually setting itself up to transform into a total beverage company. They're buying smaller companies like Costa Coffee, moving that through their distribution system. That'll lead to mid-single-digit organic growth, new CEO in place. And even though half of their revenues are outside of the U.S., we think this growth story stays intact, and actually that they're set up to beat earnings in 2019.
Is Costa a risk at all because it has physical retail locations and that's not a business that Coke is in?
I mean, I think that it's minimal because really what the opportunity here is that they can buy not only Costa, but continue to buy other non-soda brands and move those through their distribution system around the world.
Lind is another one that you like?
Yeah, Linda. This is a company that is a self-help story. They merged with Praxair last year, kind of messy with divestitures, but now moving forward. Very strong management team from Praxair, a strong growth story in a macro strong market. They're going to have volume and pricing power because they're the #1 player in the industry. And if the economy weakens, they have $3.5 billion in backlog that they can execute on. And they plan to return about $14 billion to shareholder over this.
So even in the base case scenario, which is just their backlog, they should be fine. There's no risk that any of that backlog could be canceled in a tough environment?
A significant portion of that is take or pay, so it's very, very much a nice support for them in any kind of environment.
And Costco.
Yeah, Costco. So this is a company that we love, could get hit over time with tariffs because of what happens to the retail sector, but we think they'll benefit because their pricing model, their low SKUs makes them very efficient. And if retailers try to maintain their gross margins in a higher inflationary environment, this will be a benefit for Costco, which has some of the thinnest margins in the industry. So I think they have an advantage as customers look for value pricing in the retail industry.
They have thin margins at the same time. They can't absorb any sort of impact when it comes to inflationary pressures, like, for instance, tariffs, which could go up on Friday. So how does Costco manage through that?
Two ways. One is their limited SKUs. So that gives them more pricing power in terms of they're not trying to sell everything. And then a relative advantage over other retailers who will also be trying to maintain their margins. Costco should have a lower relative price, which will be attractive to consumers in a higher price environment.
Saira, thanks so much for coming by. Appreciate it.
Thanks for having me.
Nuveen.